All right, with Joe Biden inching closer to an electoral college victory, energy executives are weighing the potential impact of a president who supports shifting away from fossil fuels. Joining me now is Neal Dingman, managing director at Truist Securities. So, Neal, I think when people start looking at energy as a sector, they might have that knee-jerk reaction and think, the major oil companies like Chevron, like ConocoPhillips, actually stand to lose during a Biden presidency. Would you buy into that?
No, not necessarily. I think if you had that in the Senate, there was certainly talk about a new green plan, and there was some talk about what maybe some what I would call a harder stance, but with just Biden that political stance themselves, I think it's going to be more of a partnership. You certainly are going to have, as we've seen, the green energy stocks, the clean energy stocks have a very nice run. But I really think it's going to be more of a partnership, because I think anybody that looks at the fundamentals of energy is going to realize you can't just cut off fossil fuels in 2 years, 5 years, even 10 years without oil and gasoline prices exploding. So again, I think it's going to be a partnership.
Okay, so look, when you look at some of the things Biden has said he wants to do if he becomes president, he may halt drilling in the Arctic National Wildlife Refuge. He might shut down that controversial Dakota Access Pipeline. Where do you see opportunities for investors if those things really do come to pass?
Sure, I think the risk is everything you mentioned. There's a lot of things on federal land that were probably the most risk. So again, where I see the opportunities would be companies like such that are in the Permian. You mentioned a lot of the majors. What's very interesting when you even compare Chevron versus Exxon, Chevron, even on their call this week, really was highlighting just how much more they're going to get into renewables, or how much they have gotten, I should say, into renewables. So I think, number one, you have a lot of the big energy companies like Chevron that are already making that way. I think if you want to stick into fossil fuels themselves and just purely fossil fuels, it would have to be more likely a company in the Permian that has very little to no federal acreage and more just private acreage, which really would not be under the Biden control.
Jared Blickery here. I want to get your take on Iran and the sanctions that are currently in place. If we do have a Biden presidency, do they go away? How does that factor into oil prices?
Yeah, hey, Jared, I think that's a good question. I think they do come on, and the stance is more obviously softer towards Iran. There is, as you said, I think a bit over 1 million barrels. The hard part we have right now, you still have 7.5 million barrels approximately that's still voluntarily shut in, largely from Russia and Saudi. So one has to think, call that OPEC plus, that if this does happen, and I think there's a chance, as you point out, that it strictly could, the onus is going to be on particularly those two countries. Are they going to step up and even voluntarily shut in more? If the answer is no, then instead of that price band that you were talking about, maybe call it mid 30s to low 40s, you could see something at least a few dollars even below that because of this additional supply. Because, unfortunately, the U.S. and most of these U.S. companies have become now the swing producers. So even if Iran comes in, they all right now are sort of producing what they call their maintenance capital levels that they really need just to survive. So most of my companies, whether it's as large as a Chevron or Exxon, down to a Diamondback and some of the pure Permian companies, they really can't afford to shut down any more of their production. So to me, the onus is going to be probably most likely on Saudi and Russia.
What do you make of Jared talking about this range, this tight range we may see crude? I don't know how tight it is, that we might see crude trade in between $34 and perhaps $40 a barrel.
I think he's on to something, Alex, because, going back to that same point that I had, anytime you still have voluntarily shut in production, I guess my fear, I know there's some others out there on Wall Street calling for $65 oil next year. And I thought that the chance of that are still quite low, because to me, the minute you get if you would get back in the mid 50s for whatever reason, if demand would pick back up and take us back to the mid 50s, you're still immediately, I think, going to see Saudi and or Russia start to loosen up some of that voluntarily production. So to me, not until this whole 7.5 million barrels that OPEC plus is still voluntarily shut in, until that's finally gone, and that could take years, I think Jared's probably on to something that you probably are, where you used to have a range that we were comfortable with somewhere in the 50s. That new range, I think he's right. I think it's going to be mid 30s to probably the low 40s if we're lucky.